Good evening, everyone. Uh, Firstly, I would like to thank all of you for joining this webinar. Also, I would like to, extend a warm thanks to Riti and the Taxmann team for offering us this, opportunity to present this webinar to the audience. Coming to today's topic on cybersecurity, Santosh and Gauri are going to unravel the mystery of the SEBI regulations which had been recently introduced and made applicable to a host of financial services entities. I use the word unravel the mystery for a very specific reason and a purpose. If one was to break those regulations into two parts, it applies to various kinds of entities operating in the financial services space. Most of these entities, if I had to classify, were operating businesses which require, and it was very apt of SEBI to bring in such a regulation so that data is protected. However, SEBI, in its powers as a regulator and possibly a slight overreach of its powers, also decided in its wisdom to include alternate investment funds, also to undergo cybersecurity mandates and comply with those regulations, which equally apply to any other business. As most of us would be aware, typically AIFs they are around 1,500 in number in India as we speak. Most of a guess would be about 80 to 90% of them would be having no employees in place. Forget at the fund level, even at the manager level, it is very difficult to expect, to have an IT person or IT team, operating on a daily basis. Most of the IT functions for AIS would be outsourced by the manager for both the entities. In light of this, background, SEBI's expectation of, coming out with a 200-page guidelines, which list down various technicalities. And as Riti mentioned, from my background of, having tax and regulatory experience, obviously, I had the luxury of Santosh and Gauri. So I did not have to break my head, reading those regulations to figure out what has or what doesn't need to be done for AIFs. Equally applicable in case of an AIF, the compliance or the regulatory team needs to break their head and figure out firstly what needs to be done, how it is to be done, when it is to be done. And that's the reason I use the word the mystery part of it. However, considering SEBI has introduced these guidelines, it is but necessary to comply with the law of the land. Cybersecurity per se is a critical function, and it is very critical, even more so in today's times, in the way we operate. A typical cyber attack can cost an organization on an average basis, $4.88 million as per a study which was issued by IBM for the year 2024. Also, in lieu of the DPDP Act and the rules which are now, as ready to be implemented, the Indian government also seems to be suggesting to all businesses, because again, DPDP Act doesn't categorize, it is applicable to all, there are no thresholds per se. So it also is emphasizing to businesses that data is something which needs to be respected and equally protected. Also, the emphasis for data protection becomes much clearer if one was to look at the maximum penalty, which is about 250 crores, which can be levied under the DPDP Act, which again, re-emphasizes the importance of cybersecurity and what kind of a role or a function it is expected to play. Without much ado, I will hand it over to Santosh to kindly, take us through the details and the nitty-gritties of the framework and what the SEBI law requires us to do for all kinds of entities and specifically for AIs. Over to you, Santosh.
Thanks, Evan.
Santosh, you are on mute.
You're talking on mute.
I'm sorry for that. Okay. So basically, well, taking forward from where Hemant left over, well, as rightly pointed out, that in today's world, wherein the entire landscape of digital landscape is changing rapidly, irrespective of what type of organizations you're dealing with, whether it's for your individual organization or whether it is for your clients you are serving. Well, if you see, you must have encountered that the entire business operations is controlled by the digital environment. Further, automation is also adding to the easiness, but at the same time, also adding to the complexities, I would say. So, in this rapidly changing world, wherein majority of the business is IT dependent, at the same time, the complexity is extremely on the high, and at the same time, your environment is exposed to the so-called virtual world today, wherein we never know that where the data is residing, where the data is coming from. As a result of which, well, it's extremely important that your infrastructure or your client's infrastructure, which you are looking at, whether it is an IT platform, whether it is an operational technology platform in the case of power process environment, or whether it is a automated platform as far as IoT is concerned, the entire infrastructure is vulnerable to certain extent as such, because if you see, because of the nature of business operations which you are doing, because of the nature of environment which you are working and also the global reach, you are running a lot of risks. Every organization, because they're using technology to the extent for all the business processes, as I said, the technology usage risk is also on the higher side, because the technology may be deployed at a vanilla level, or there may be technology not properly configured as such, and further, well, or the technology may not be managed properly. So there is a huge technology risk exposure because of the usage of technology itself. As a result of the technology exposure, there is equal amount of operational risks. Whether it is a IT operations, whether it's a business process, or whether it's an application which is running on your environment, have to undergo a lot of operations, have to undergo a lot of changes, have to undergo a lot of iterations as such, and that's a workflow-driven approach. As a result of which, ensuring that the operations are integrated, there is a huge amount of operation risk which needs to be addressed both from the IT aspects and also from the business process aspects. Going forward, well, because of technology operational risk as such, and because every organization is regulated by certain regulations, okay, as such, or it may be also regulated by certain standards because of the nature which they operate over globally and cross-border areas, there is equal amount of pressure for organizations to address the compliance risk. When you talk of compliance in the subsequent slide, I'll just brief about, well, especially in the area of BFSI segment where there's a lot of compliance requirements, as you all must be knowing. So basically, apart from the standard financial audits, tax audits, or in the GST audits, a lot of importance is given in the field of cybersecurity audits as such. So, irrespective of what the risks are, eventually your organization or client's organization reputation is at stake, and this extremely important that how to handle this. Every day today, you must be getting, I would say, cyber attacks in the form of phishing, in the form of vishing. I would say around 60 to 70%, in fact, more organizations must be attacked in some way or the other. Sometime or other may be aware, they may not be aware. The whole objective of getting this into a regulatory framework is such that, okay, it gives a transparency not only to the business owners, it also gives a transparency to the regulators and also gives the transparency to the end customers. The whole objective is that how the end customers' information is protected, and that's why all these regulations have come to picture. So basically, when we look into
Santosh, you went on mute.
okay, the financial segment is extremely regulated as such. Typically for like in though I mentioned domestic sector, but in fact even in the international segments there are high regulations are there. Typically in the domestic sector, well, you have the RBI, which is again giving regulations to all banking, whether it's a private bank, public sector bank, cooperative bank as such. Considering the growth of fintechs coming into the environment and the startups coming operating in that area, lot of focus is going on in the area of non-banking financial institutes. So basically, NBFC companies are coming, and that's the RBI has also mandated NBFCs, irrespective of what their assets are, they come into the framework of doing guidelines. SEBI, which is the subject of this presentation, you'll see that SEBI is actually it's got most of the registered entities in the radar now because that's where the financial transaction happens. Similarly, insurance companies has been regulated by RDA. Now, typically, when we look into any organization, okay, whether it's in BFSI or non-BFSI, eventually the transactions are controlled by all these areas, and all organizations are linked to all these standards and regulation in some way or the other. Hence, it is extremely important that you align your business framework, you align your IT to address all these areas, and that's where regulators have come into picture, saying that okay, what needs to be done, what are the things to be addressed, how it is to be addressed, and that's what regulations is about, ensuring that well you are operating in a structured environment to ensure that well end customers' expectations are finally managed. This is what SEBI has brought. In fact, as of last week of August, when this SEBI guideline was released, so SEBI did had a guideline which started from earlier 2000 as such, but these guidelines have been built across. Earlier, only MIs were included, then the mutual funds and the stock markets all were included in step by step. And if you see the number of SEBI regulated entities on a huge list has been presented in the table. So till date, only you would say majority of the MII stocks and mutual funds and all have been were in the gamut of SEBI regulations. But of late, they have also included AIFs, they have also included investment advisors, they have also included portfolio managers. So as I said, each of these companies, AIF or portfolio managers, their operating strength is very limited. As such, they hardly have their IT assets deployed in the manner. So basically, they are deploying the IT assets as the business grows. So basically, what SEBI has done is that try to bring an integrated approach towards addressing the cybersecurity and cyber resilience framework in an integrated manner, and within this all areas, SEBI has further categorized this all registered entities into five different categories based on the type of business, based on the criticality of business, based on the number of assets which they are managing, and all as such. So, based on the category of the business, SEBI has defined a set of controls which will be brief you in subsequent slides, that how these controls are to be addressed, how these controls are to be looked into, and what exactly are these controls, and how exactly one should look into while addressing this. While SEBI has mandated that, well, for the organizations which were already covered under the RA radar, they had to get it completed by end of December. And for others, they have said that, okay, by March, they should complete the first level of audit as such. In fact, SEBI has already started their back-end work of auditing the MIIs. In fact, they have already floated requests for ensuring that, well, whether MII has been audited is completed, and they are soon going to audit the MII, revalidate that whether they are following the guidelines or not. So basically, this is what SEBI talking about. Now, when we talk about SEBI, what is SEBI trying to put into picture? I would say we all know that data privacy, data protection is the need of the hour, because the whole objective is to how one protects the customer, how one protects the customer information, and how one also protects the customer's privacy of it. We know that our Data Privacy Act has been moving in the government for last 1 or 2 years, and in fact, just in January, the rules have been out. So definitely, they have a well-defined guideline again that well, what needs to be done to protect customer interest. And similarly, SEBI has brought out this regulated framework by which it has tried to integrate many aspects of many standards as such, and updated a best practices measure just to ensure that how possibly all these standards can be unified and brought under one common umbrella, so that all the areas with respect to governance, risk, compliance are addressed in a establish a sound risk management practice so that organizations are aware of what their risks are. risks to the IT assets, risk to the non-IT assets, risk to the information, and also risk to the data which they are storing. While the earlier regulations had defined, but this regulation is gradually defining across multiple domains that, okay, across each domain, what needs to be done, how it is to be done. As such, as the focus is on ensuring that the data privacy, data protection, and data localization of that. Apart from that, considering the amount of REs which the SEBI has to deal with, instead of having different formats for different entities, SEBI has defined into the regulatory requirement that, okay, these are the type of documents should come to SEBI as part of their internal requirement or the audit. Now, these documents have to come in the form of a structure defined by SEBI as such. And again, based on the type of query, based on the category, documents vary. Some documents have to be given quarterly, some documents have to be given monthly, some documents have to be given annually. So definitely the job of an auditor, whether it's an internal or external, is become extremely challenging because they have to ensure that they have to adhere to SEBI's guideline. Non-adherence will possibly lead to penalties, at least to the SEBI REs wherein the requirement is mandatory. Again, as a step, the objective is that, well, organizations have a well-defined KRAs and KPIs defined for managing the information, for controlling the information, for ensuring data privacy, and hence how organizations can build a capability maturity index, which means that how organizations can gradually mature its IT infrastructure so that all the cybersecurity controls which are there have been looked upon. As an organizations mature from small to mid to regulated to qualified, the controls will vary, the controls will become more stringent as such, and adopting a phased approach and ongoing sustenance will help organization to achieve this far more effectively. More focus is going on monitoring the aspects. Now your transactions which are there are all transactions which are either going locally or going cross-border as such. All these transactions needs to be effectively monitored as such, and that's why SEBI has put a strong focus in ensuring that all the events and activities are monitored properly so that the security is tracked as such, and it will aid not only the regulators, it will also aid the certain bodies who are the emergency response organization and government to identify and track fraudulent transaction as such. So with this, SEBI has introduced these features which will help more from the customer side and also help organization to ensure that they have built the structured framework and adhering to all areas. We have been talking about GRC. I know the audience in this possibly will a combination of IT and non-IT. So I just thought of taking a small slide on what this GRC is about. Let's imagine that you have an environment which is a house structure, which are having its own policies, own procedures. The traditional approach which is there, we're moving from the traditional approach to IT and now moving to automation and digitalization. So basically, all your operational policies has to be aligned with the organization requirement. And these operational policies is nothing but a combination of policies, procedures, and governance, which we call it G as part of the governance, so that we know what is to be done, how it is to be done, when it is to be done, and who are the roles and responsibilities identified in each area. When we have this structure, policies, procedures deployed, it will help to understand and quickly adopt it to the environment so that down the line the team is aware of what are the do's and don'ts of using a particular environment and specifically do's and don'ts when addressing the cybersecurity area as such. The next part is risk. Your business operation is risk oriented because your entire business functions are digital, which is a combination of the operations and combination of technology. So you need to understand your business process risk. You must have heard the term of risk appetite. So organizations, when they do a business process assessment or the risk assessment, helps to understand that which are the controls which needs to be deployed, which are the controls they can take at a standby mode, or which are the controls they can take it on priority mode. So this is assessment helps organization to ensure that they are well protected against both internal and external threats. And the last part is compliance. I had again said in the earlier slide that, well, compliance helps to have a structured control over what is being done. So it's like an observer. saying that, well, whether you have done it, whether you are following it, and compliance is an ongoing, it's not a one time. So basically, it's a 360-degree approach to ensure that all the processes, governance which are defined are ensured that they are followed, the risks are addressed, and mitigation is done, and you are adhering to well defined policies and procedures. That's what exactly it is, so that well you ensure that your IT is well aligned with the business processes. So this is what the overall objective about. Now, going ahead, well, I'll ask Gauri to just go in depth further and brief about how this environment SEBI has integrated, and through this granular approach, what exactly SEBI is trying to achieve with respect to area. So, Gauri, I think I'll leave the chart to you. You can take forward and then take it ahead.
Thank you, Santosh. So, the cybersecurity cyber resilience framework introduced by SEBI. Now, this framework represents a critical initiative to ensure the robust security measures to the regulated entities. The regulated entities, the range that SEBI has defined. So, these are stockbrokers, stock exchange, depositories, mutual fund asset management companies, portfolio managers, investment advisors, and other intermediaries like brokers and clearing operations. SEBI has emphasized a structured and proactive approach to safeguard the digital assets and mitigate the cyber risk. Now, each this type of regulated entities has unique operational and risk profiles, which the framework addresses through the tailored applicability of controls. Now, these are, if you see, these are well-defined 20 plus controls mapped across various domains. Now, there are four main pillars of SEBI CSCRF: governance, risk and compliance, identification and protection, detection and response, and recovery and resilience. Now, what SEBI says here is that by governance, risk and compliance, by GRC, it wants us to have a strong governance structure to ensure the accountability, including appointing the committees, having policies and procedures in place, and the oversight mechanisms. By identification and protection, REs must classify their data to ensure that their critical assets are classified well, their endpoints are secured well, and they should also implement robust cybersecurity controls like access management, etc. And by detection and response, SEBI means to say that the early detection of all these the critical threats and to have continuous monitoring to the through the tools like SOC, SOC, along with incident detection and response plan. So there are SOCs wherein some of the REs can opt for market SOC also, which SEBI has specified. By recovery and resilience, SEBI means to say that you need to have a framework, mandates like disaster recovery, in case if there is any incident, post-incident reviews and resilience mechanism, so that you're prepared for the future threats, if any. Now, if you see this framework, where 20 plus controls are defined, it is mapped with each of the regulated entities, and some of the controls are mandatory, some of the controls are required to some of the regulated entities, and some are optional. So it can be reviewed looking at the entity's specific risk profile and their maturity level. So the best practices recommends that all the controls needs to be there, so that we can address, or we can have the security posture, I would say stronger security posture in place. So it can be looked once we adopt cybersecurity, and we see what the risk profile is and how the maturity level is of the particular organization. Now, SEBI says that SEBI has also come up with key controls. When it comes with control measures, it says that there is organizational context and oversights, which involves defining the roles and responsibilities, the risk management, supply chain management, identity management, cyber risk management plan. The ISO certification that SEBI has asked for may not be mandatory for all. The SOC efficacious testing and incident reporting to SEBI. So if at all there is any incident, how the incident has to be reported, when it has to be reported, etc. So all this control is carefully designed to align with the framework to address or to achieve the objectives of resilience and to meet the compliance. Now, SEBI has mandated this all to the regulated entities so that the entities must establish and document all this comprehensive cybersecurity policy. They should conduct periodic vulnerability assessments. By vulnerability assessment, I mean to say the system assessments. Your firewall, you may be having your access control points. So the vulnerability assessment has to happen. This can be aligned, and this has to align with cyber capability index so that the measuring can be done and the improvement of the maturity levels can be also looked into. Also, it is important that timely reporting to SEBI has to be done, and it has to be defined so that whatever breaches, if at all there are any breaches, it can be reported to SEBI, and continuous improvements can be taken into consideration. There has to be also the awareness training for the employees so that, and also the stakeholders, so that any mistakes from the insider should not bring in any threats to the organization. So failure to comply to all these mandates may result into regulatory penalties that and ultimately to the reputational damage. So in summary, SEBI's unified framework is to address the challenges, the unique challenges the financial sector may face. And by adhering to this, controls and mandates and the regulated entities can achieve compliance and security and cybersecurity posture. Now moving ahead, now that we have reviewed the control measure summary, let's explore how these controls are applied to different types of regulated entities. SEBI has categorized the REs based on their size, complexity, and asset management, asset under management, AUM, ensuring a proportionate implementation to the cybersecurity and cyber resilience framework. The categorization is designed to address the various risk profiles, the varying risk profiles and operational capabilities of these entities. Now, these controls are broken down into mandatory, required, optional, ensuring that no entity is overburdened while maintaining the baseline of the cybersecurity for all the REs. Now, if you see in this particular slide, we have brought the example of alternative investment fund with self-certification less than 100 crores, small size REs, between 100 to 500 crores, mid-size REs, 500 to 1000 crores, and qualified REs more than 1000 crores, 1000 crores and above. Now, this classification ensures that cybersecurity measures scales with the size and risk exposure of the entity. Larger AIFs with higher AUM and broader operational footprints are subject to stricter requirements, while smaller entities can adopt controls that are less resource intensive with less efforts, or still can be less effective. Now, when we deep dive into this control categories, with this organizational context, roles, and oversight that we spoke about in the control measures, the controls that SEBI has defined, for qualified and mid-size RE, if you see, most of them are mandatory controls. And the risk management is also mandatory. it is required, awareness training is mandatory, so on and so forth. Now, moving ahead, there are also additional controls. If you see additional controls like vulnerability assessment, ISO 27K certification, SOC efficacy testing, cyber capability index, post-quantum cybersecurity, post-quantum cryptography readiness, IT committee and governance. Now, SEBI's approach doesn't just focus on AIFs. The same categorization and proportionality principles apply to other regulated entities as well, like stock exchanges, mutual funds, etc. So, now SEBI's goal is to safeguard the integrity, confidentiality, availability of data across all the financial institutions, ensuring that cybersecurity becomes an integral part of governance and operations. So, to conclude this slide, CSRF framework for AIFs and other REs is a meticulous design structure that balances right with flexibility by categorization of entities and aligning controls with their size and risk profiles. And now SEBI ensures a resilient financial ecosystem capable of withstanding the evolving cyber threats. So as we proceed, we will explore more about how these controls can be effectively implemented and monitored.
Yeah, so taking forward from what Gauri said is that, well, it's all what is to be considered that how this framework can be deployed effectively. And well, the way a structured approach, being a 360-degree model, we call it as an Adam approach, wherein it's a religious 360-day approach where there is an annual ISC Information Systems Security Wheel, which ensures that your current state asset is reviewed regularly. You have building the necessary policies, procedures, documents so that it is in lines with your business requirement and your IT is aligned so that your information system controls and IT controls are well defined. When you do this structured assessment as such, you will come to know that, well, what is your current state posture, what are your gaps, and then based on the gaps identified, you can prioritize what exactly is to be done in phase one, phase two, phase three. As rightly said by Gauri, not everything is to be deployed, not everything is required to be automated. It all depends upon your business needs. It all depends upon how possibly you're looking at your IT infrastructure maturity, and also it depends upon what is the individual risk appetite of an individual organization. So when you look at controls, the controls can be documented. In many cases, the gap is either in documentation or in many cases there is no documentation, and the controls are ad hoc deployed. So when we do this entire assessment across all this 20-point program which SEBI has defined, it will help the organization itself to build a maturity, align itself proactively to the business growth requirements. Because SEBI is definitely not going to limit to this. They are definitely going to put most stringent controls so that the end user business investor also is protected. And lastly, ongoing maintenance and support, which SEBI is also harping on, so that the security monitoring, the fraud monitoring, transaction monitoring, all these processes organizations are expecting. So they're expecting organizations to follow so that any security breaches or incidents can be effectively identified proactively at the same time mitigated systematically. So that's an approach what we generally follow. I call it an Adam approach. A stands for assess, D stands for define, apply and maintain, and that's the first person approach which I generally am following in, at least for my
Santosh, you're on mute. Santosh, you're on mute.
On mute.
Okay, I'm just almost, my cursor is stuck, just a minute, sorry for that. Okay, so when you look into the audit approach as such, what does CSRF say? That look, based on your RE, identify your requirement. Based on a RE, identify what your compliance should be. Based on your compliance, see what is the gap in your environment. Based on the environment gaps, see how you can close the gaps so that you are ensuring that you are working at a required level to your business requirements, so you have understood and you are taking necessary proactive action to close. Based on it, well, you will be able to help to build your concrete set of documents, procedures, and work instructions, which will help your business and also will help your IT team to ensure that they are proactively doing the job. At the same time, as I said, not all gaps can be closed in one shot. So definitely, there will be some gaps, short-term gaps, long-term gaps, which you need to be addressed. You can prioritize it and then ensure that they are closed in a systematic way. Because that's the reason SEBI is harping on continuous improvement, continuous enhancement, and continuous audit and assessments so that all these gaps are religiously looked, practiced, and followed. And definitely, this is again a 360-day approach which needs to be reviewed periodically. So as I said, SEBI has about 15 odd reports which they have defined that okay, these some 15 formats. Now each format is not required by everybody. Again, based on the type of RE category, based on type of the subcategory, the reports are to be provided either quarterly or half yearly or annually. However, to ensure that well you have this matrix and KPIs available, you have to do it on a continuous basis. Hence, that's a challenge to the IT team, your team, so that it has to get continuously managed and monitored. And so, with that, I just wanted to a snapshot that well, when you do this audit, what is the output of this audit? Audit is nothing but well, looking at what you have, what you not have, and what is to be done. SEBI has defined a concrete structure of the policies and procedures which needs to be looked into. Now, again, these policies and procedures, the guiding principle towards bringing your thoughts that okay, this is to be done, this is not to be done. How much of granularity again depends upon the maturity of our organization. For example, in case of MI, this policy will be a huge document, but in case of AI, this policy can be a simple document of operating working instructions of how is the roles and responsibilities, what is the access control, what is the procedure for handling an incident. Typically, if in AI, wherein they have a minimal infrastructure with just up to 5 or 10 users, wherein they are either using shared drive or a cloud infrastructure or cloud, well, again, they can define that, okay, what is to be done, what is not to be done, by defining the guiding principle and build upon that. Basically, how do you do it? Whether you do it self-assessment or whether you do it by a third party or whether you do it by any other IT team, the whole objective is that, well, you identify what your need is, identify what your SEBI requirements are, map the SEBI requirement, and based on the SEBI requirement, manage it on an ongoing basis. So self-assessment can be done. Based on the self-assessment, well, necessary gaps get identified and then take it forward. However, SEBI has defined that well, the audit report must be coming from a partner who is certain empaneled so that it goes in a structured format. The last part of it is that I'll ask Gauri to take forward that okay, when this audit report is done, what is the output and deliverable possibly one must expect from this area?
Okay. So this phased approach of audit, it offers a comprehensive methodology to meet compliance requirements, but also to build a resilient cybersecurity framework. Now, each of these phases is very critical, wherein we, after comprehensive audit, we come up with this report wherein you can see your bar chart which represents the compliance percentage for various domains. Domains as in the IT asset and inventory management, how it is, how you manage your IT assets, how the incident management framework is followed, how the business continuity and disaster recovery framework is defined and followed in your organization, and the data protection, so on and so forth. So if you see here in this particular instance, the IT asset and inventory management and backup and recovery management scores high percentage. Those are high. But when it comes to governance and other data protection, data leakage controls, it scores lowest. So this is where the management needs to look into. This is where the management needs to focus on. So this gives you a comprehensive understanding of your existing cybersecurity posture, your security posture in your organization, and this gives you the clarity what you need to do, what you need to target. Uh, the goal of this assessment is to highlight the gaps. The goal of this assessment is to highlight the weaknesses and to improve upon. And also to meet the cybersecurity the SEBI CSRF compliance requirements.
So basically, in the traditional approach, it can be done using a traditional checklist-driven approach, or it can be done using automated set of tools which are available, which will collect the compliance information. So again, based on the business needs, small, big, necessary can be considered, necessary can be deployed. And when we do this holistic approach of doing an audit and assessment, all these gaps can be unearthed, as a result of which you will be able to take necessary action. And then criticality, specifically in case of MII or depository participants or mutual funds, which is very, very critical, we can look into areas that how possibly granular approach and automation can further help to increase the resilience and at the same time build a maturity environment.
You are on mute again.
So that's what we wanted to bring out in the session. And just to sum up that, okay, as part of BSc advisors, well, we are here to provide end-to-end risk advisory and consulting services as such. So whether it is in the field of BFSI or whether it is in the field of non-BFSI segment, whether it's pharma, manufacturing and all, cybersecurity is, I would say, near mandatory for all the environments. Though not all be governed by respective regulators, like BFSI is strongly governed, but other like pharma and manufacturing, I would say they don't have those stringent regulations. But again, due to data privacy and protection coming again, I think most of the organizations will be requiring to address this governance, compliance, and risk. Again, this governance, compliance, risk can be done using traditional method or automated method. As such, as part of our service catalog, well, BSc advisors are able to address all the needs of whether it is risk advisory and compliance, whether it is a technology assessment as such, or whether it is implementing and managing your SOC infrastructure as such. At the same time, if there are requirements of looking into providing strategic advisory services, well, BSI is well positioned to address services in those areas. So with that, I think I'll leave the table open as such. And if you have any questions and answers, we'll be glad to take it as such. I think really, I think we are through with our session. So we are open. We can open the sessions for any questions and answers. Hello. Hello, Riddhi.
Yes, we can hear you, Sandesh.
Yeah. So if there are any questions and answers, we can take it right now as such. Heyman, you are there. Would you like to give some closing remarks?
Sure. I think basically, Santosh and team have effectively summarized, what is expected for regulated entities and in AIFs in particular. We have been, in touch with various AIF clients, across sizes, clients ranging from less than 100 crores in terms of even for self-certification, how do you fill the form? What do you fill? So that itself, funds have reached out because as I mentioned, for the lack of IT team in place, how do you grapple with those technical terms? So that's one piece of the advice. And if you are anywhere between above 100 or above 500 or 1,000, it's just that the ask, kind of gets stiffer and stiffer. Above 1,000, most of the items, as you would have seen in the one of the slides, it is mandatory, and therefore, the roadmap kind of becomes very essential. And the way I would sum it up is that this kind of SEBI, audit, which is necessary, I think that's just the first stage of, moving towards cybersecurity for AIs. Uh, and obviously, with BSC or any other partner, you can possibly discuss the roadmap, which could last from a couple of years to, a 5-year thing in terms of how do you achieve those milestones which are necessary. And I believe SEBI is also looking at it from that perspective. It's not going to be as if on 1st April 25, all of us, automatically will reach that maturity. It's going to be a stage-wise approach, and that is where Santosh and team can come in play and ensure that we don't have any hiccups on the way.
I think I have one question here. I'm just reading it through. Is from Akash Vyas AV as such. Okay. So basically, well, Akash, I'll take your second question first and the first question second. So when you say what is the difference between mandatory requirement referring table and sample order investment fund? So basically, well, in AIF, okay, uh, there are 4 different categories. One is self-assessment category, one is mid-size, one is small size, and one is qualified RE. So when you say these segments, under each segments, they have said that, well, some controls out of defined, which are 2025 controls, they have to be mandatorily deployed for qualified REs. Now, when you say qualified REs, which means that based on the AUMs, you fall into the category of qualified REs. So all REs who are more than 100 crores as such, they directly fall into qualified REs. So definitely qualified REs or mid-size REs, if they would like to go and implement, in fact, so for qualified REs is a mandatory to implement. Now that when you say mandatory, which means that there has to be a process, policy, procedure defined, and then the control can be automated, can be manual as such, but there has to be a certain policy procedures defined and seeing how this control is being addressed or risk mitigated as such. With respect to MEs, which are, I would say, required category, which means that SEBI has not mentioned is mandatory for the fact that, okay, they don't want to impose any penalties in that area as such. But when you say required, which means because their business is substantially large and they're addressing the customers' funds at a large level, it is extremely important that the end customers' funds and transactions are safeguarded. Hence, considering their value, they have said it is required. Again, depending upon the risk appetite of an organization has to say. But based on my experience, we feel that when it is required, SEBI auditors, when they audit, they will definitely come out with suggestions against that if these controls are not deployed. So that answers my second question. The first question we're talking about, what specific controls the SEBI mandate for non-production environments such as deployment, UAT, and DMC? Again, so this is a question wherein SEBI clear, irrespective of SEBI, in fact, any regulatory guideline you say has given a well-defined requirement that the necessary infrastructure should be segmented, whether it's logical segment, physical segment, it has to be ensured that there is no, I would say, I would say, open environment between production and open environment between deployment or development. And that's what is required. See, basically, the mandate says that, well, you have to protect yourselves as such. Now, it also says that, well, segregation has to be deployed and it's a best practices because organizations, SEBI practices combination of SEBI, NIST, CCMP as such. So NIST definitely says that, well, the land has to be well segmented and definitely there has to be a well-defined control between development, UAT, and DMC. That's the best practices which ISO recommends. That's the best practice which NIST recommends. So basically, well, it's up to again an organization, but the best practice says that, well, it is always better to have your production, pre-production, UAT environment segregated so that the changes are not reflected. You can have the changes done in the production, non-production environment, and post-checking it can go into deployment environment. There comes the question of having a VAPD as such. So I hope you have answered both of the questions. If there are any, definitely we are there to give you more additional insights as such, and we can then have a follow-up session as such. I think that was the one question which has come, Hemant, as such. Any other questions we are willing to take, else we can take it offline. We still have about 5 minutes to go for the web session to close.
So she just added one more question.
Yeah, thank you, Farhan. Should non-production servers go into VAPT? Well, again, non-production servers definitely should go to VAPT because that's where your initial testing will happen. Because whatever changes which have been done, okay, those should not get reflected into the production environment. Now, when we do vulnerability and penetration testing, again, it is not just VAPT. We do vulnerability management across the entire ISO OSI layers because VAPT is not just network level VAPT. We have to do application security testing, which is at application level. We have to do configuration review at the configuration level. So unless and until your both environments are exactly 100% match, it's we can say that okay, you can do on one and not on the other. But in many cases, the production environment is totally different from the non-production environment. In many cases, the non-production environment is working on virtual environment, while the production is not on virtual. So it is equally important that you do VAPT in both the segments. One is before testing, and the other is once you're happy with the testing, you can then go into the production setup. I hope this answers the question. Well, again, I said if it is 100% segregated, definitely it's well and good. But there are also you have to ensure that if it is a static environment, not a DevOps type of environment, not a DevSecOps type of environment, there are chances that there will be a gaps missed. So it is always healthy to do in both the areas so that you know that you are ensuring that the vulnerabilities are tracked. And it also many times happens that you have tested the non-production environment. By the time it goes into production environment, some fine change in the URL must have been done by the software code at the last moment. So it is always better, but again, it depends upon the organization's risk appetite that whether they would like to invest on it or whether they would like to take a sort of a shortcut measure. Well, welcome. In fact, love to address more questions. You can get in touch with me one to one. Also, if you have more questions, willing to address and look into the in-depth requirement. I think, Heman, it's just 3 minutes to 6. If you have any questions, otherwise, is it fine to close the session?
Yep. I think we can close the session if there are no more further questions.